You know, every successful business eventually hits this point, a moment where all that amazing growth starts to feel a little bit like chaos. So today, we're going to talk about how to get from that messy pile of transactions to a system that gives you total control.
I want you to picture this. Your business is an absolute hit. Sales are through the roof, customers love you, but behind the curtain, you are just drowning in this sea of invoices, receipts, and payments. How on earth do you actually know where all the money is going?
Well, the answer isn't to work harder. It's definitely to work smarter. And that means getting a proper system in place. This, my friends, is where an accounting information system comes in to save the day.
So what is an accounting information system, or AIS? Well, at its heart, it's basically a machine for turning raw, messy data into clean, useful information. Think of it as the central nervous system for your company's money. It tells you what's happened, and it helps you figure out what to do next.
But here's the thing. Not just any system is going to cut it. A really effective one has to be compatible with how you actually do business, not trying to shove you into some weird box. And it needs to be flexible enough to grow right along with you. But above all, it has to give you relevant info and genuine control, making sure the benefits you get are way, way bigger than the costs.
Okay, so how does a system like this actually work under the hood? Let's zoom in on the very first step. How do we organize that giant, chaotic pile of transactions?
I want you to think about it like sorting your mail. You wouldn't just throw everything, bills, personal letters, junk mail, into one big box, right? Of course not. You'd have separate folders. Well, in accounting, these folders are called journals, and they're designed to handle very specific, high-volume transactions.
And it turns out there are 4 main folders that catch something like 90% of a company's daily business. You've got the sales journal for any sale on credit. That means the customer is going to pay you later. The cash receipts journal for, you guessed it, any cash coming in. The purchases journal for stuff you buy on credit, and the cash payments journal for any money going out. Simple as that.
Now check this out. This decision tree basically makes sorting transactions foolproof. It starts with a really simple question. Does it involve cash? If the answer is yes, you just need to know if you got it or if you spent it. If there was no cash, then was it a sale or was it a purchase? See? This simple logic turns what seems like a complex process into just a few easy choices.
And just look at how clean this is in practice. Here's a sale to a customer, Maria Galvez. Instead of some complicated multi-line mess, it is just one simple, clean line in the sales journal. You've got the date, the invoice number, the customer, the amount. That's it. So efficient, so organized.
All right, so we've sorted all our transactions into these neat little piles. But that kind of creates a new problem, doesn't it? How do we keep track of the details for every single person or company we're doing business with?
Knowing that you have, say, $4,384 in total accounts receivable is fine. It's a good number to know. But it doesn't tell you that Maria Galvez owes you $1,000 of that total. For that, we need to add another layer of detail.
And that layer is called the subsidiary ledger. The easiest way to think of it is like a detailed address book. You have one for all your customers who owe you money, that's your accounts receivable, and you have another one for all the vendors you owe money to, that's your accounts payable. Now this is the really cool part, how all these pieces connect. Your main accounting record, the general ledger, it just has one big number for accounts receivable. But, and this is key, that big number is supported by the subsidiary ledger, where the individual balances of each customer, Galvez, Harmon, Levy, and Schmidt, all add up perfectly to that total. It's the big picture and the tiny details all perfectly in sync.
So here, we can actually trace the entire journey of that transaction with Maria Galvez. Look, it starts in the sales journal, right? Then it gets posted to her specific account in the subsidiary ledger. Then, at the end of the month, the totals from the journal update the main accounts in the general ledger. Every single piece of data flows through the system in this controlled, logical way.
Okay, so that manual system, that's the foundation for everything we do in accounting. But today, let's be real, computers do all the heavy lifting. So let's take a look at what that actually looks like.
So all that manual posting from journals to ledgers that we just walked through? Well, in a modern computerized system, all of that happens instantly, automatically. The logic is the exact same, but the software does all the boring work for you.
Take a look at this. This is the manual way. See all those arrows? That's you or your accountant manually moving numbers from the cash receipts journal to the customer's account and then to like a half dozen different accounts in the general ledger. It is so complex and there is so much room for error. And now, you just do this. You fill out a simple invoice on a screen that looks just like a regular form. You hit Save and Send, and poof! The software instantly does everything we saw in that last complicated slide. It updates the customer's balance, the total accounts receivable, your sales revenue, everything. That, right there, is the power of a modern system.
And of course, there are tons of tools that do this. For small businesses, you've probably heard of programs like QuickBooks and Sage 50. For the really big, massive corporations, you have these huge enterprise resource planning systems, or ERPs, that integrate every single part of the business, from accounting all the way down to the factory floor. So you're probably thinking, if computers do it all automatically, why did we just spend all this time learning the manual process? That is an excellent question, and is probably the most important takeaway from all of this. It really comes down to this simple truth. To truly master any subject, you have to understand the fundamental principles. The software? It's just a tool that executes those principles really, really fast. When you understand the logic of journals and ledgers, the software is no longer some magic black box. You know exactly what it's doing behind the scenes. You can spot an error when a number looks off, and you can truly, deeply understand the financial story your reports are telling you. It gives you real control. And that brings us to our final question for you. Now that you've seen the engine that drives all of this financial tracking, I want you to think about your own business or maybe your own financial goals. What's the single most critical number that this system produces for you? The one number you absolutely cannot afford to get wrong.